Welcome to Market News. I'm your host, and this is Wednesday, July 29th, 2026. Let's start where the action is right now because today the headline is unmistakable. The Dow Jones plunged roughly 800 points in a broad, panic-driven sell-off that captured everything investors are feeling at this precise juncture. We have earnings season in full swing, we have the Fed's next rate decision looming, and on top of that, geopolitical tensions are escalating with reports of a strong U.S. response to Iran attacks, sending oil prices higher. It's a textbook pressure cooker for markets, and the Dow's 800-point dive tells you where sentiment landed at the close. Let me paint the bigger picture for you. Across the full breadth of the market today, technical analysis scanned over 10,000 symbols and returned just 15 bullish signals against 35 bearish ones. That's a very telling skew. When you look at 10,560 different companies and only 15 of them show bullish technical setups, that tells you the path of least resistance heading into this week is decidedly downside. And I want to flag something interesting about those bullish signals. A lot of the names on the positive side are small caps and speculative plays. DFNS jumped over 83%, SDKH surged 167%, EG up 86%. But here's the thing, while those names show strong momentum on a technical basis, they also appear on our overbought and potential overextension watchlists, which adds an extra layer of caution. These are the names that can gap up dramatically one day and reverse the next. Now, let's talk about what really drove the story today, earnings. And at the center of the earnings universe right now is a single word that keeps coming up over and over. Microsoft. Tonight, the market is waiting on Microsoft's earnings report, and the framing from analysts is extraordinary. They're calling it a potential determinant of whether the $700 billion AI spending boom continues or gets curtailed. Think about the weight of that for a second. Microsoft's earnings could decide the trajectory of $700 billion in AI infrastructure investment. That is not hyperbole. That is how big this moment is. And the stock that moves most closely with Microsoft today, of course, is Nvidia. NVDA was essentially flat on the day, up just 0.25% at $197, but the volume was enormous, 134 million shares. When a stock trades that heavily and barely moves, it's telling you that there's a massive tug-of-war happening between bulls who see an AI infrastructure super cycle and bears who think the spending is unsustainable. Meta was also squarely in the crosshairs today. Q2 earnings are expected, and the consensus view is a beat. Analysts are bullish on upside. But here's the complication. Meta has recently posted its record losing streak, and it stems directly from investor scrutiny around how much the company is pouring into AI. There's a growing narrative that the market is questioning whether these massive AI capex commitments are going to pay off in the near term, and Meta is the poster child for that debate. So even when you expect an earnings beat, the stock doesn't necessarily reward you, and that's exactly what's happening with Meta. Let's move through some of the other major earnings stories because this was a day full of market paradoxes. SoFi posted record growth and record profitability, and its stock dropped 10%. That is genuinely maddening for investors who like things to make sense. And it wasn't just SoFi. We saw the exact same pattern with T-Mobile. They filed an 11% post-earnings plunge, followed only by a 6% rebound the next day. Then Humana, the healthcare giant, beat their estimates and still saw their share price fall. That pattern, multiple times in a row in the same earnings season, is not noise. It's a signal. It tells us that the market is not just evaluating whether a company hits its numbers. It's evaluating forward guidance, it's evaluating margin trajectory, it's evaluating whether the AI spending cycle is about to shift in a way that benefits or hurts them more than expected. When a company like Humana beats estimates and the stock still drops, it means the forward-looking concerns are overwhelming the backward-looking results. On the healthcare side, Boston Scientific cut its own outlook due to weak demand for its Watchman heart device. That's a direct management call, and those are always the ones to watch. VF reported a wider than expected fiscal first quarter loss, and their shares tumbled accordingly, along with related apparel plays like Nike and Levi Strauss. But GE Healthcare was one of the bright spots, soaring during the session and giving the market something positive in an otherwise ugly day. Now, let's talk about Tesla, because there's been a fair amount of noise building up around that stock. Ford has delivered negative news for Tesla investors. Michael Burry, the famous investor everyone talks about, is reportedly shorting Tesla, alongside Nvidia and Palantir. And analysts have been discussing how far the stock would need to fall before Tesla actually loses its trillion-dollar market cap status. When you see the combination of negative industry news, short interest from notable investors, and analyst discussions about loss of critical mass, that doesn't create the most comfortable environment for shareholders. And we cannot talk about the tech mega cape today without mentioning Apple. There was widespread discussion about whether Apple could briefly touch a $5 trillion market cap. And alongside that, Apple is facing regulatory scrutiny in the UK over its App Store pricing, which Apple itself characterizes as price regulation. That's a story that has been simmering for a while, but the market is clearly weighing how much of a headwind these regulatory pressures create versus the massive momentum in Apple's business. Qualcomm was also in the spotlight with its upcoming Q3 earnings report, which is expected to highlight AI's impact on the smartphone market and the company's data center expansion plans. And on a broader semiconductor play, SK Hynix and Celestica both delivered earnings that caught analyst attention. Celestica in particular got a nod from RBC, with the firm calling the Q2 results solid and increasingly attractive from a valuation standpoint. Let me now take a moment on the notable movers. If you're looking at the biggest decliners, biotech and specialty plays dominated the losers list. Enel crashed 47% down to $2.24, and VVE fell 44% to $3.23, and Repl dropped 38%. These are not names I would characterize as market movers on their own, but when you see a wave like this, especially in speculative names, it tells you that money is pulling back from riskier positions and parking itself on the sidelines. On the volume side, Intel was the most notable large-cap player, down 5.86% on 154 million shares traded. And JetBlue, jumped 10.5% on 87 million shares, giving the airline sector one of the few positive stories in a sea of red. A few other headlines worth mentioning as we round out the broadcast. Procter & Gamble's executive chairman, John Moeller, announced his retirement, which is a notable change at the helm of one of the world's largest consumer goods companies. On the international side, the Kospi sell-off deepened, with leveraged ETFs drawing heavy fire as the Korean broader market continued to underperform. Canada signed its second European LNG deal, which is an interesting structural long for the energy transition narrative. And at Ornell, researchers launched a collaboration with REV on fusion infrastructure, which is a nod to the longer-term energy play, though the timeline on that is measured in years, not quarters. And let me circle back to where we started, because the tape tells such a clear story. The Dow at negative 800 points. The S&P 500 and the Nasdaq both under serious pressure. 100-560 symbols analyzed, 15 bullish, 35 bearish. We've got oil prices rising on geopolitical tension, the Fed rate decision approaching with zero consensus on direction, and the most important earnings of the season, Microsoft, about to drop and potentially redirect the entire AI trade. That's a volatile combination, and if you're positioning your portfolio heading into tonight, you've got to be thinking about what happens in each of those scenarios. That brings us to the end of today's episode of Market News. We'll be back tomorrow with another look at what moved, what mattered, and what's coming next. Until then, stay sharp, stay cautious, and we'll see you on the tape.